Good morning, folks, and welcome to Member Stock Chart Request. This is where I review the symbols that our members submit for me to review on video. Let's kick things off today with a chart of Bitcoin. The last time I spoke about Bitcoin was several days ago, and I mentioned that if we broke down below these key support levels here, that we would come down and retest the lows last seen back in November, and sure enough, that's exactly what happened. So the obvious question is, from fellow member Evan, where to from here? Is there a trade to be had? It depends upon your goal and your time horizon. If you're looking for a trade up to resistance here, then in all probability you will get that rally higher, but it's not going to last long. Why? It's because you have a lot of overhead supply, meaning you have buyers that bought up here. They want their money back. They have no delusions of grandeur that they're going to see their money once again. The minute that they turn flat on par with their original investment, they are going to sell. Bitcoin really hasn't had all that much of this in the past, and it's going to be all the more difficult now in current state to get through it. Why? It's because you have the ability now through the futures market to short Bitcoin. Why does that matter? Well, it matters because shorts are not dumb. They know that the psychology is for buyers back here to sell at resistance levels. And these here lines are resistance levels. So every time we hit a resistance level, they will sell. Now, should there be a time in the future where Bitcoin is able to work its way through all this resistance? Sure, but it's going to take time. Now, if we break down below this lower band of support here, then we're coming back down again to retest these lows at 90.20. And if it breaks and we close down below that level, we're going significantly lower, down to around 7,900. So how would I play Bitcoin? What would I do were I you and interested in getting long of Bitcoin? First of all, I would not be using a daily chart. Take it, throw it out the window. Why? It's because you're in a downtrend now on a daily basis. You're making lower highs and lower lows. And the daily chart has a lot of volatility, a lot of noise, as I like to call it. So how do we combat that? Well, we go to a weekly chart. Now, on a weekly basis, we have our stochastics trading down below 50. That is pretty bearish. Why is that bearish? It means that when we rally on Bitcoin, there's a very fair chance that that rally will fade. You want to see your stokes above the 50 level. So that's negative point number one. Negative point number two, our RSI is making lower highs and lower lows. And it's validating the downtrend on Bitcoin. Now, the way I would play it, were I decidedly bullish in the long term, I would wait for a pullback and a retest of the support level. And in all probability, we're going to get it. You just need to show patience and open up a small position, or as I like to call it, scratching the itch. Sit with it. Make it 15-20% of your intended position. So if you want to buy 1,000 Bitcoin, buy 200 down here. Then as we begin to break out above this declining 45-degree angle downtrend line, you want to add more once we close above that level. Then you want to become decidedly more aggressive when we recapture this support level up here at 13,500, let's call it. And if we close above that level, well, then in all probability, we're rallying all the way back up to prior highs. And the question becomes, do we break out or do we put in a lower high and roll over? Much as what we did here. Remember when I first started talking about Bitcoin, I said, it's not a bubble yet. You need to see a pullback to support, which we got. Then a rally, which we got. Did we put in a lower high? Yes, we did. Did we take out the prior low? Yes, we did. And I warned, if that occurred, look out below. And sure enough, we broke down below support. So be very, very careful here, folks. What may look like a sale to you of Bitcoin may just be a trap. How do you know when you're right? It's when you see big money flows moving into Bitcoin. How do you identify that? Look at your volume bars. Simple as that. If you see above average volume, you're seeing institutional money rotate in. And more importantly, you want to see breakouts above resistance levels. And you want to buy high and sell higher, not buy low and hope that you move higher. And if you do buy down here aggressively, you better use a stop right below support, because once it breaks and closes down below it, we're going a lot lower. Members, I'll be in the forum tonight in the cryptocurrency channel in the members area this evening if you want to talk more about Bitcoin. All right, the next chart up is from fellow member Evan. Again, Evan with Bitcoin, Evan with gold. Hey, Evan. All right, so Evan wants to know what's going on with gold. Well, rather than using a static chart, I want to use the real-time chart. And on a real-time basis, we are at current. I posted this in the forum last night that in Asian trade, gold was making new yearly highs. I know the year is still young, no great feat there, but it matters because we are breaking out above resistance levels on weekly and monthly charts. So when I mentioned this last night and posted it in the members forum, we were just barely breaking out. But now, this morning, we're up nearly $13 per ounce on gold. So what do I think about gold? We're heavily invested in the gold mining names. We bought more yesterday, and we bought more on Monday after booking some profits last Friday. So from my action and not my words, it's obvious that I am extremely bullish on gold. And I think that the path of least resistance is higher. Now, on a weekly basis, we're breaking out above this upper band of resistance. We haven't closed there. We have still 3 trading days left to go, but it's looking good so far. If we break back down below the support level, well, then we have to sit on our hands and wait for a better entry point. But right now, it's looking good. And once we take out the September highs at 1363, you're going to see gold rip through the ceiling. And you may be saying, you know, Bob, interest rates are rising. That's a vote of confidence for the U.S. economy. No, it's not. Not yet anyway. What it is our creditors finally waking up and saying, Jesus, man, you have a lot of debt over there and you're looking to put on more. So we want more interest payments. You already have the Chinese talking about it. And how do I know that that's the case? All you need to do is to take a look at the dollar. Here's a weekly chart of the dollar. We're at multi-year lows. So in a strong economy, a vibrant economy, your currency doesn't go down to multi-year lows, it goes up. So this is the market sending everybody a wake-up call. It's just that Wall Street just hasn't answered the phone yet. But we have, and we are building positions. Let's do more charts. The next chart up is MJX. This is the Alternative Harvest Fund. This is a fund that has a lot of exposure to South America. It's also a weed play, a marijuana play. I'll post the documentation I have on it in terms of holdings in the forum, so you can check it out there. So MJX, let's go to a weekly chart. We're at the precipice of a breakout here. I think we're moving higher. Once we get a close above 39.26 and we close there, it's off to the races. We retested the lower band of the rising uptrend channel this week. It held. Volume is strong. And we've seen a lot of big volume weeks recently. Back to the daily chart. So would I buy it here? No, I can't buy it here. We're too close to resistance. I would wait for a close above 39.26. I would rather buy high and sell higher. If we get a pullback to this lower band of support, I would open up a position there. One of the two, or both. But not right here. Too close to resistance. Volume outstanding. Higher lows, double bottom setup on ultimate oscillator, validating the move higher. All good stuff. I like the chart. It's a buy. Constellation Brands. This is a consumer staple stock. And many of you may be saying, you know, they sell a lot of beer. Isn't that discretionary? No, trust me. When times get hard, people drink beer. So it's a staple. And it will do well in an economy that weakens. And guess what's ripping through the ceiling right now? Consumer staples. They're finally breaking out. How do I know? We bought them. We bought them on the breakout last week. So let's go to a weekly chart first and we'll drill down. On a weekly basis, we broke down below the lower band of support 3 weeks ago. We managed to find support here at $214. Now, is this the pause that refreshes? Perhaps. Would I buy it here? It depends upon your investment horizon. If you're looking at it as an investment, go ahead, go nuts. Use a stop right below $214. I believe it pays a 1.9% dividend. If that's good enough for your situation, fine, go for it. Now, as a trade, I'm a little bit more skeptical because I would prefer to buy high and sell higher. What does that mean for the purposes of this conversation regarding STZ? What it means is that I know that if I buy today, I'm going to have to wait a couple of weeks to get through this resistance level, and there's no guarantee that that will occur. So as a swing trader, I would rather wait for it to break out and close above 229.50 and then buy it there. Why would I do that? It's because I know that if we close above that level, there's no overhead supply. There are no prior buyers waiting to get made whole. Therefore, I have clear blue skies, no resistance above. Now, another way to play it, which I also find attractive, is buying it where we closed yesterday, which was above the 50-day moving average, and we closed above this upper band of resistance out of this bull flag formation. Now, keep in mind that we may put in a lower high, so you need to use a stop. I would keep it really tight. In fact, if we broke back down into this trading range, I would stop out of the trade, and so I would keep my stop, let's call it at 217. If you wanted to keep it loose, use 215, 214. Now, again, getting back to the other trade entry rationale is to buy it here on this move higher, out of this breakout point, scratch the edge, keep your buys small, and then wait to see if it breaks out above this resistance level. If it stalls here, book some profits, and then buy it back if we close above 229.50. Or hold it and add more to your position on a close above that level. So there's a couple of ways to play it. Either way, appreciate the fact that if we break down below this support level here at 214 to 212, it's all over. It's going a lot lower. You have a head and shoulders setup forming here. Left shoulder, head, right shoulder. Here's your neckline at, let's call it the 214 level. If it breaks, it goes lower. There's something going on here. I don't really like the price action. The staples are breaking out to new highs, as are the discretionaries. So no matter what category you want to put it in, it's underperforming the parent sector. Maybe it'll play catch up now. We'll see. The next chart up, Sorrento Therapeutics weekly chart in fuego, on fire. Will I buy it here? No way. It's too extended. It's gone too far, too fast. We're going to get a pause. Besides that, we have a ton of resistance above. So I suspect that once we hit 8.35, you're going to see sellers move in and take the shares down. This is a very volatile stock, so it'll probably go down and at least retest 650 over the course of the next couple of weeks. And you can see that we've already seen some sellers move in, as noted by yesterday's price action. Now, would I be a bit surprised to see it move higher? Not at all. It's in play. The sector is doing great. The stock is doing great. So it's doing exactly what it's supposed to do, moving along with its parent sector. But the time to have bought it was back here when we broke out above resistance, then pulled back and retested. Now it's a bit extended. I can't buy it. And we have resistance immediately above. So right now, it's a watch for me. I wouldn't go buying it. Volume rose yesterday to the downside, but we did close off the lows of the day. It's a watch. Twitter. We'll begin here with a daily chart, because while the weekly chart is telling a bullish story, the daily chart is no bueno. It's not looking good at all. We have a lower high on RSI and a validated breakdown. It's confirmed. Same deal here on Stokes. So you have two of your major indicators which are breaking down in earnest, and price is reflecting it. We have a double top, and while yes, we're able to put in a higher high on January the 12th, we couldn't hold it. We couldn't close above that level, so it's an intraday high. So we have stiff resistance at 25.50. We pulled back, we broke down below support, and this is what I always teach members. Watch out for your double tops. The test is always at the top. Do we break out and close above prior highs, or do we break down? And if we do break down, do we take out prior lows? Because if we do, that's a confirmed downtrend, and that's where we are on a daily basis with Twitter. Volume, very high. There are issues here. The market is sending signals. Now we are trading below the 3 standard deviation Bollinger Band in red. We're going to get a pop here soon. But the question is it a short covering rally, a dead cat bounce, or do we put in a new lower high and then break back down? I couldn't buy these shares until we recaptured 23.76 and we closed there. That's the most important thing, a close above 23.76. Because if you would have bought an intraday breakout here on the 12th because we made a new high on the year, well, then by the end of business that day, you got clubbed like a baby seal because it couldn't hold its mud. It couldn't hold the breakout. Weekly chart. All right, so on a weekly basis, I mentioned earlier, the weekly chart tells a more bullish story. So this is our higher level view. We can get all caught up in the daily chart because it's very noisy, a lot going on here. Sometimes it's just best, not sometimes, all the times. It's best to pull back, take a deep breath, and say, okay, what picture is the market drawing for me? What's the story here? Well, here we have a beautiful, absolutely stunning double bottom setup here. We put in a low at 13.73. We rallied up to 25.25, and then we pulled back to 14.12. That's a higher low. That's a double bottom setup, a W formation, whatever you want to call it. Call it cupcakes. It's bullish. So we had a nice move higher. We saw a rally with the triple Q names. That's good stuff. But we hit resistance. Why was there so much resistance at this level? Is it any wonder that it marked the pivot point seen in this W formation? So the 25.25 level is a critical resistance level. Why did this become a critical resistance level? It's because you have all these buyers back here from 2015 who bought and they just want their money back. It's a psychological resistance level. So when do you buy the shares? Well, you could look for a support level, a safe one. If you're not currently long and you're dying to buy the shares, you're just chomping at the bit. I get the feeling that's emotion. You want to be in it because you think that you're missing out on a deal. Fine. Scratch the itch. You have a bit of support down below at 22.06. Ideally, though, you see a pullback to the support level here at 20.80. There's no guarantees it's going to get down to that level, though. But where would I become far more aggressive, far more confident that the trade is going to work out in my favor as a long? On a close above 25.85. If we close above that level, folks, we're going up here to $32 per share. How do I know that? It's because you have a ton of shorts with stop loss points right above 25.85. They know what's going to happen. They're not dumb. If we close above 25.85, we're going a lot higher. So you're going to see institutional money rotate in because it's a technical breakout, and you're going to see shorts get squeezed out of their positions. So on a short-term basis, I'm bearish on Twitter because of the daily breakdown. Longer term, I think that the trend is still higher here. We're just going to pause. And I happen to like the setup here on a macro basis, a weekly basis, so we'll keep an eye on it. And we'll talk about it in the forum if you have a question. United Airlines, weekly chart. We have the transports, which are poised to break out to new highs. And we have a bull flag formation on a weekly basis on United Airlines. What's the play? Well, the week isn't over yet, but so far this week we're flashing a bullish key reversal. If we happen to close at the highs of the week so far or higher, I would be an advocate of putting on a small position. I would buy the breakout, a close above $79 per share, and I would be an aggressive buy on a close above 83.04. Why 83.04? That is a new high for United Airlines. So it would be a technically significant breakout for the shares. Daily chart. We're in a bull flag formation, very close to a breakout point here. I wouldn't buy it today unless, of course, we closed above this upper band of resistance. And the transports must validate the breakout, meaning you want your parent index, whether it be the airline index, whether it be the transport index, to break out to new highs, confirming the breakout on UAL. If those sectors begin to roll over and you're still seeing a breakout on UAL, watch the volume. While it may outperform its parent sector, in the short term, longer term, it probably will not hold up. So that's a caution flag. Watch out for a divergence. But right now, they're trading in tandem. Volume outstanding yesterday. Above average volume. Very critical. So great volume action, great price action. UAL looking good. Quest Diagnostics, weekly chart. This is a stock that had a really rough spring. It's rebounded. Good support down here at 89.90. And we broke out above this upper band of resistance. I like the chart. Weekly basis, I like the chart. Now, where the challenge comes in for Quest Diagnostics is 2 points. One, right here at 107. The second is at 111.46 because you have sellers above. Now, if we get above 111.46, it's a buy all day long. Now, you could buy the shares this week because we did break out and we haven't gotten ahead of ourselves. We'll go to a daily chart in a moment. But just remember that you have resistance above that will challenge the shares. Now, what's concerning to me here is that up volume bars are dropping off dramatically. Now, we have 3 trading days left to go. We may move higher. Ultimate oscillator moving higher. Daily chart. You can see that as we near resistance at this 104 level, the sellers already moved in, but yet buyers below. They bid it off the 102 level yesterday. Me, I wouldn't buy the shares until we closed above 104. That would get us into this trading range here, and the probability of us rallying up to 107.77 is pretty good. Watch your volume, though. Those volume bars on a weekly basis, they're concerning. Bristol Myers Squibb, weekly chart. We are breaking out this week, folks, on a weekly basis. So if we close out the week above this upper band of resistance, BMY is a buy. Higher lows on Ultimate Oscillator, and we're beginning to break out. Both lines on Stokes, above 50, good stuff. Daily chart, yeah, really nice breakout here. We have a breakout on both a weekly and daily basis, and we're clearing resistance levels from prior failed breakouts. Like back here, we had broken out on January the 12th, then we had a bull trap. We broke back down. Now, we have closed above that 63.22 level, so we've now negated that failed breakout. Let's watch for a close above 63.55. If we get that, I think you could buy it on a momentum basis. And honestly, if we close above this resistance level here, you can just buy it as a swing trade, an investment, because I think we're going a lot higher. This sector is in fuego. Members, I'll be in the forum available to talk about these stocks this evening, so join me there. If you're not currently a member, sign up for the 14-day free trial offer because it is going away because of demand. I just don't have enough spots. We're a boutique operation. We're not a churn and burn mill like some of these other competitors, so I just simply don't have enough spots to engage with members adequately. So please don't hesitate. Sign up for that 14-day free trial offer because it is going away soon. And that's it, folks. Everybody have a profitable trading day. Members, I will talk to you this evening on Market Wrap.